Hey, this is Matt with PriceActionTradingSystem.com, and this is going to be our chart lesson for today, and it's going to be a little bit different. I did a trade example today, but unfortunately, um, I failed to, uh, somehow I didn't have any sound, so I'm going to start this thing over. I'm basically going to go over the trade. The video is actually playing here now, and you can see, and I'll explain this trade to you and what was transpiring. Um, we had a two-legged pullback back to the main trend line, which is right here. And you could have waited on the second entry here, but sometimes you can see how bullish that bar is. There's a rejection off that trend line right there. So I didn't want to wait. So I waited on the trade to trigger. It ticked higher, and I just dropped the limit order in there. And you can see I could have gotten filled a tick or two further back, but that's still a pretty good entry. It's under 2 points. Um, and when I tighten my stop, I get a much less than 2 point stop there on that trade. And you can see I've got it at 2 ticks below the signal bar, and I've only got a 7 tick stop there. So it's a pretty good stop. I probably could have moved it up to 1 tick here because, and you would have had it down to 6 ticks because I liked this trade. I felt really confident on it. It didn't take off as quickly as I expected it would. It took a little while for the buying to come in, but the trade works out all the same. I ended up getting my 8 ticks for $400 on the scalp, or I'm sorry, 4 ticks on 8 contracts. So that's basically about $400 on that scalp. And then I ended up getting, I left this where my runners where they were, and ended up getting eight, basically 2 points out of the runner. So I got another 4 points off the runner. So in total, I got 12 points on that trade. So that was basically a $600 trade right there. And that was just one late afternoon trade. And it wasn't even the best trade of the day, although as far as taking off quickly and getting in and out of your trade quickly, but it did move along pretty fast. And I'm not going to show the whole video. I'm probably going to pause here and move forward in it. But I am going to go, and then I'm going to open the chart and show you a few other things, and then we'll call it a day. And lately it seems like every time I rush to try to demonstrate a trade, I'll make this mistake and forget to get the sound going. I'm trying to take the trade. I'm trying to get the video going, and that's why you don't want to trade. I mean, that's why I don't record a lot of my live videos trading, because you make too many mistakes. And at least I made the mistake on the video, and you don't make the mistake on your trade, because that's when you really have problems. So for y'all that ask why I don't show more live trades, that's exactly why, because you're trying to do too many things at one time. And when you're trading with live money in a real account, you need to be concentrating on live money in your trade and not on trying to record a video. So hope that makes sense to you, but that's generally um, that's what happened here. The trade triggered. Actually, the trade triggered, and then I dropped the limit order in. You could have used a stop on this one, but because it was 2 legs back, I was really tempted to wait on a second entry. And if I had, I wouldn't have got. It would have been the same entry either way. The second entry triggered right here at the same price the first entry triggered at. So you wouldn't have helped yourself other than using a limit order, which you could have gotten filled actually all the way back to 1875, which would have got you out 2 ticks quicker than what I did get out. So other than that, that would be the only advantage of putting your limit order a little further back. But then you risk missing the trade altogether. So, but this trade does go on. I don't think it ever goes any lower than right here. So it never gets within a full point of my stop. And then I do get my scalp here. It moves it to break even plus one. I think I adjust that back to break even and then just let it go. And I didn't record anything past that because the video had already gotten to be about 25 minutes long. So I just basically said, hey, you can go back later today and look and see what happens. I'm either going to get stopped out at break even on the runners, or I'm going to get 2 points out of them. And prices went on to easily get the 2 points. And much more for that matter. So I'm going to shut this down. You can see the trade here, and I'm going to move forward until where it actually feels and moves my stop and show you that part, and then we'll probably skip back to the real chart, and I'll show you some more things, and then we'll call it a day. But I'm going to pause it just a moment. Okay, I'm going to pick the video back up right here. I can't remember exactly how much longer it took to go ahead and fill this trade, but I don't think it's much longer. And just while we're waiting on that, well, you'll see the chart in a minute. I'll wait on the regular chart. There. Here's where the original trade was, right here. And this bar is what filled my actual trade. And you can see prices easily went on up and filled my runners. And it, like I said, if I'd have been here managing this trade, still trading regularly, I would have waited until we had a touch up here to let that fill. I would have kept moving that target up. And you can see it touched right there. So you could have gotten filled maybe 18.19, 18.19, somewhere in that area. And then you would have had maybe 7 points on 2 runners, so another 14 points. Probably would have almost tripled the trade. So it doesn't take a whole lot of trades to make a lot of money, depending on what your leverage is and how many contracts you're trading. But you can see prices have just continued, and look, we get the same. It's almost identical setup as this right here, all over again. And once you see it once, it's usually good for another one. And you can see how well that channel fits right there. There's no guessing that I have that channel right. I've seen 2 or 3 different people send me their charts today, and I don't think one person had the same channel I've got. There were some close ones. Some people were close, but you got to get this channel right. You can be close and still get to the same place, but what I look for is prices have to fit neatly. Now listen to this. Let me explain what I mean by neatly. Notice how every time prices touch this trend line, they reverse and go the other way. Look what happens just about every time prices touch the upper trend line. They reverse and go the other way. Look at the median line. Prices are playing off it both sides. So that's a good channel right there. I can glance at the chart and just about see that in a blink. I don't have to sit here and play with it that much. Occasionally 90% of the time I can glance at the chart and I can draw those lines and they'll be perfect. The other 10% of the time I may have to play with them a little bit, and I may have to move them around, and I may adjust them a little bit, but I haven't adjusted these lines at all other than to lengthen them and continue to carry them on out. And you saw me doing that in that earlier video. I did have to lengthen them and carry them on out because I didn't have enough channel. And my target was 18.25. I got that. I actually had 2 different ways I did this. This is where the uptrend kind of started right here. So that was my first target. I drew that first, and there's your first big major correction. And from right there you can see 18.25. That was my first target. But I also go ahead and draw it from the very low to right here and get a secondary target. And you can see that, and that's exactly where this move went to. So that's how I find those targets. You could have actually probably used this leg as well right here. That's one leg up, and then there's a major correction back to the other side. And then look at that. You get the same spot that I got by measuring it the other way. Don't ask me why it works. I have no idea. But I've done this long enough to know that, it's very accurate. It works over and over and over. It's not 100%, but nothing in trading is 100%. But if you watch any of my videos, you can go back and watch, and I can show you those targets. I had that target since prices bounced right here. And so I called a 825 target. You could call that by 9:30 this morning, and it hit up there around, we'll just call it right here, basically 12:30. So 3 hours earlier, you could call this as a target for trying to reach on these prices. And so, and it's not, I'm not saying that to brag. It's nothing special. It's just it's a strategy we've learned and teach that works over and over and over. And anybody can do it. It doesn't take a rocket scientist to figure that out. It can be done over and over and over. And you can do it a couple of different ways. One of the other ways I sometimes do it is off the lows. So I would go like that right there and then put this on the high. And you see you still get the same spot, 1825. And we went a little bit higher than that so far. We could still go higher. We haven't had a trend line break on my chart yet. You could say that maybe this closed outside and this might be good enough, but I don't know. My line just may need adjusting a little bit. I may be slightly off. That's so close, I wouldn't call that a break yet. So we'll see what happens. We could just turn down and whatever, but on a trend this strong, I'm guessing we're going to either go into a trading range up here or we're going to break the trend line and come back up and try to retest these highs. So that's what the rules tell us, so that's what I would expect to happen. It's not magic, when I tell you that I'm expecting something to happen and then 2 hours later somebody sends me an email and says, wow, you called that on the nose. It's not because I've got any special magic. It's just because I'm using these tools that we know work, that we've been using for years, that work over and over and over. So anybody can learn it. And it takes a little while. Don't get me wrong. You can't learn it overnight, but you can learn it. And you just have to trust in it. That's the big thing. So let's look at the early part of the chart. I'm going to show you a couple of things. But people always ask me, where's the most logical place to catch runners? Look at this chart right here. If you had this trend line right, which I can tell you, I've got that trend line drawn properly. So every time we touch that trend line, if you'd entered there, you probably would have caught a runner. And so our pullbacks maybe to the EMA and the midline, they're not as strong usually as the main support area or the main resistance area, but we wouldn't want to counter trend this trade. There's a couple of times you could have counter traded this and it would have worked, but there's a couple of times you would have got stuck and now watching the market 8 or 10 points higher, and you're just like the example I showed you of the gentleman the other day that lost big time. Well, guess what? He sent me an email today and says, hey, I've sat here and watched a few trades go without me, but guess what? I wasn't crazy enough to try to counter trend trade this, and I see the value. I learned something from my mistake. And so you can't always look at terrible mistakes that cost you as the end of the world, because a lot of times you learn something very valuable from him, and he learned about counter trend trading. But I bet you he's heard me say it a million times, but he thought he was smarter than the market, and he tried it and he got burned. And not only that, he started, he's read somewhere, start adding on. They teach you to add on and average down your price. Yeah, well, ask him how well that worked out for him. It cost him to blow his whole account out, basically. And there's something else I'll tell you too. I don't know how many brokers are doing it now, but if you blow your account out, there's something about if you lose more than 80% of your account value in one day, they charge you a liquidation fee too of a couple of $100 or so, 150 or $200, somewhere in that range. So be aware of that, because you may think you've lost all the money you're going to lose and find out you lost more money than you thought you lost. So when you're blowing an account out, normally $175 may not seem like a lot of money, but if you're blowing an account out, it might be a great deal of money. So something else to think about there. Let's see. Let's talk about a couple of things here early. How to determine this. You could have seen it early. I'm sorry. I tell you, I think I'm worried that I may be coming down with the flu. I hope I'm not, but my throat's been real scratchy the last couple of days, and I just do not feel real good today. So as soon as I wrap up this video, I'm going to get out of here, and I'm going home and get me a good night's sleep, go to bed early. And I hope I'm here tomorrow. So if I'm not here tomorrow, you can just assume that, hey, I'm either not feeling good or maybe even have the flu, because I just do not feel very good at all. My throat, I have that funny feeling. My knees are a little achy, so I hope I'm not coming down with the flu. I hope I just have some kind of bad head cold coming on here. But throw that out there before I forget about it. But let me show you a couple other things real quick. We're going to wrap this video up, and we'll go from there. But you could have seen it early a couple different ways. It looks like a spike and a channel, and there's actually looks like a channel here. And either way you see it, you basically get to the same place. You get the break of the trend line, and then the move down. This other one's the one I was actually looking at it um, as a spike and channel, and I had them both on there, but originally I had this up here, but you don't get as many touches there. We turned down too early several times. So if you drag it on down, you can see it fits really well there off those closes, and you get a couple of breaks and look at it, come back and test it to the tick, and then come back and you get one more break. So I think that's the channel there, and we got the breaks early right here, and then dropped on down. But you might have even seen this as a trading range, and this is a failed breakout. Either way you saw it, it's all good. And let me show you this. If you saw this as a trading range right here, this is leg 1 down, then you had this, and then here's leg 2 down. Either way you measure it from there, you get the same thing basically, because they're all equal. And we didn't quite get there. And then we had this reversal pattern occur here, and that's a good sign. Plus, we've already had a break of the channel and all that, and a new low. So there's plenty of reason to think, hey, we're going a lot higher than the way down because we couldn't make an equal move. That's telling you something when it can't make that move or overshoot that move. It's probably going to make a bigger move up. So that's some more information you get from that strategy of looking for the measured moves. So, but let me show you how you can recognize this reversal here. This is what you would have seen early. You've got 2 legs down with a 2-legged correction in the middle. 2 legs down. And here's leg 1, and then you get a 2-legged correction, and then there's leg 2. It's a nice, if you went to a bigger chart, you'd see 2 clear legs there, but don't look at multiple charts, because people hear me say that, and then somebody emails me or texts me or emails me rather and tells me, hey, I'm looking at 5 different charts here, so I don't have to guess if it's something on a bit. You can't do that. You will get distracted and you'll just confuse yourself. But anyway, this thing was correcting back down, and it bounces right here. That's a first entry short, and if you'd have taken it, it would have worked. And really, there's a 2-legged move back there, but we've already had a break. And but even if you saw that, this is a nice bearish bar. You go in short right there. It's an easy scalp, but that's all you get out of it. So now let's wait on the second entry. All right, we got a little tick up. So the next bar that something breaks lower by even a tick, that's a second entry. But you don't want to be going short right there. So you got to wait on something to come up here and then give you a better entry if you're going to go short on the second entry. And look, the next bar, it ticks lower and then turns up. So that's a failed second entry short, and you could go long right there. But people will ask me, how do you know it's going to be a failed second entry short? How did you know that? Well, you don't know. All you know is that you don't want to be going short right there. And what you might be, once it breaks lower, what you might be thinking to yourself is, hey, if this turns up, I got a failed second entry short. And guess what? I got a little reversal pattern. It's not a strong reversal pattern, but it's there all the same. Look at this. You got a new low. You tried to go a little bit lower, and it quickly bounces. And notice coming down how all these highs are lower than the previous high, equal or lower. Lower than that one. This one's lower than that one. This one may be a tick lower. This one's equal to that one. This one's lower than that one. This one's lower than that one. This one's lower than that one. And then suddenly you go lower and you come up, and this high is higher than that high. And you make another swing, and this high is higher than that high. Plus this swing closed, you didn't get any rejection off the trend line really or the EMA. It kind of went on through. That's that's a signal that, hey, this thing could be reversing it. At the very least, just be prepared. Maybe definitely don't go short on a first entry unless you get a great setup. And I don't really like that setup there. But again, it probably fits our rules to take it. It's kind of an aggressive entry. And you would have got your scalp, and then it bounces. But the way you know to take the failed breakout, you don't really know. You just have to be thinking, hey, I don't want to go short here. So if this breaks lower and suddenly holds, and notice how that high is a little higher than that one, and that one's a little higher than that one, and this almost closes on its top. But as soon as that broke lower, I would have probably put a buy stop right above this bar and say, hey, if it comes back and goes higher, I'm going to have a failed second entry short, and there's plenty of room back to here, and I'll probably give me an easy scalp off a trap right there, because there's going to be some people get trapped to the short side. And look what happens. And guess what? If you took that trade, you could have, you're in this trade with runners, and you can ride them to wherever you feel based on how you want to manage that trade. I probably would have at least ridden them. I probably, early you might have had this line right here. I would have at least ridden those till we touched that line right there. Um, but when we went on through again, it's telling you that something's not quite right. We've probably got another line up here, and this is probably a median line. Excuse me, this cough is killing me. But notice that this just keeps going all day long, and we're down here trying to bounce again. Sorry, I had a little interruption there, but we're about to bounce again. But hopefully you can see that, and that's how you take these traps. People ask me that all the time. Well, how do you know it's going to be a trap? You don't know it's going to be a trap. You just anticipate it, and just like right here, this is like a lower swing low. There's a little bit of a swing right here, so this is a little bit. This one's a little bit lower than that one, and then this one's a little bit higher than this one. But these two are definitely higher than this one. But anyway. Because this is a little bit lower than that one, you can count this as a new swing low right here. And so you're going up, there's a first entry short, pull back a second entry short, and guess what? It fails and goes higher. So you could have gone higher right there, gone long right there. That's a little bit, questionable, but guess what? It still works. And then you get another little trap lower, so, you could think about going long right there. And this is a little double bottom, so that's like a new low as well. And you're going up, first entry short, pull back second entry short, another second entry failure, go long right there. And you can see how they trapped everybody, because look at it take off. That's a sure sign. Just keep watching for those things. And most of the best ones are going to come right off of the strong support and resistance. And another thing that, I've said it before and people say, oh, I never heard you say that before, is once you start trending back, the trend, even though this is a temporary pullback, the trend is now down temporarily. So you could start your count off the lows because we're trending down now. Even though this is an uptrend, that's what would happen. A lot of times what I'll do is wait for a second entry off the low end here. So there's your first entry, pull back, and there's the first time you kind of get a hesitation, and those two matching highs are like a little pullback. So that's your second entry long right there, and look at it go. So sometimes, and here's another one. Here's your new low. There's your first entry, your pullback, and then your second entry long is when it broke above that bar. And it's because we're trending down now. So you count off the other side. So if that doesn't make sense, go back and watch that over and over and over until it does make sense, because that's what I do a lot of times. That's a lot of times it's a little bit aggressive to take that first entry. Of course, I did it right here, and it worked. But I had to ride out that little bit of a pullback. And there generally is a reward for taking a first entry over a second entry. And in this case, is that where actually my trade was back here. In this case right here, there was a little bit of actually I'm confused now. I can't remember if that was my trade. I guess this was it right here. I'm a little bit confused. This actually, the second entry was maybe a tick better than the first entry right here. But they're not fooling a lot of people now. Most people can see that this trend is really strong now and still going higher, and it's still going higher. So look at that EMA. It's all the way up. Notice how once we got above the EMA here, notice how prices never really got below, other than maybe just to poke through a little bit right at the major support area. That's what a strong trend looks like. When prices are, and here's one on the way down. Notice how we didn't really get above it till right here. But you've got a reversal pattern that goes with it. So when you're seeing prices, now here's one. Look how flat that is, and look how prices are swinging back and forth on both sides of that EMA. That's a trading range. And, when people ask me, how can you tell the difference? Does that really mean that much? Well, of course it does. I wouldn't be telling you if it didn't mean something important. You can obviously see prices going back and forth. They're not trending this way very far. They're not trending that way. They're going, one minute they're above the EMA and the next they're below. That's telling you something. Look how flat it is right there. That's a trading range. But now look, that's a downtrend to there, and that's an uptrend since then. So, the EMA is extremely important. You don't use that alone. You got to use that with other clues, but, understand that it's important and it's telling you something. That's why we use it. So, This thing is getting up to 25 minutes again, so I'm going to wrap it up. I hope you enjoyed the trade example, although I didn't do the best job because I missed the volume and had to redo it. But it gave me a chance to go back and do some other important stuff too to go along with today's trading. So, but this is just simply a perfect repeat pattern um, of this one right here. So I guess this was my trade right here. This is where I entered, I think. And then you get a perfect almost repeat pattern right here. And when you see those repeat patterns, man, they're so reliable. You know, take them, especially when it's obvious. Doesn't matter if it's a repeat pattern or not. You're getting a setup off the main trend line here. But you got to learn to get these trend lines right too. So if you're not doing that, keep working on it. It's, you know, you'll learn it. You know, when you get enough time and energy and effort into it, you'll learn it. But it takes a while. So I'm going to wrap this thing up before it's 2 hours long. This is Mac with PriceActionTradingSystem.com. And again, if I don't see you tomorrow, you'll know why. I'm not feeling good, and we'll see you Monday. I'm out of here. See you next time.